The pessimism was obscene. People attacking everybody who could be vaguely bullish made me think, okay, if the liquidity cycle is turned, we know what happens, which is over this period, the economy will weaken. So the probability of more liquidity, or more cowbell, as I put it, comes back into the market.
In today's video, Raoul, the co-founder and CEO of Real Vision, takes over the helm to update us on what's driving global markets, his big picture outlook, and how AI is going to change the way we work.
Can you tell us what happened? So that was going through your head at that point in time, and then what went on in the days and the weeks to come, and then maybe zoom out and tell us, reflect on the last 12 months in crypto.
Yeah, so that was the moment when we realized that there was going to be much bigger implications to the space, because that was the first major domino that's going to start accelerating everything. But having been in this space for quite some time now, since 2012-13, I've seen this before many times. And it's where narrative suddenly gets to peak frenzy, a narrative of fear. And so it was by June that I started. I don't really trade a lot, so I just kind of, I'm an accumulator. I wait for opportunities to add. And at that point, I had realized that, okay, we're now in the phase where there's mass liquidation, mass fear, and narrative couldn't get much worse. Did it get worse in October? I'm not sure, because ETH never made a new low. So this was utter panic, because it took people by surprise. By October, we were kind of used to the fact we were in our own banking crisis of sorts. But back then, it was peak fear. So what I was doing was trying to zoom out. I try and spend as much time as possible hearing the noise, and then trying to step back out of it to say, okay, if you filter out the noise, what is going on here? And it was the deleveraging of the space. But my liquidity indicators, which I think is the primary driver of all markets, were bottoming. So I'm like, so here we are. Just take the log trend of Bitcoin or the log trend of ETH. We'd come down to the log trend, which is the secular uptrend, and we're at the bottom of the liquidity cycle, which was turning up. So that to me was like a golden opportunity. And I started making noise about that, saying, well, that June period was really an opportunity to start, significantly adding into the space. I'd not sold anything. And that if you understood the liquidity cycle and the business cycle, which most people in crypto didn't really yet understand, that this was going to be a good opportunity. Then we play through to the FTX thing, which was, a enormous moment. Probably more so for mainstream media than it was for the space itself. And so it became headline news all around the world. And again, by this stage, things like the year-on-year rate of change of M2, which was a big driver of Bitcoin, which was my secondary order liquidity indicator, had also picked up. So I'm like, okay, here we are when the narrative is completely opposite to the indicators. Now, not all indicators work all the time. Everything is a probabilistic outcome, but the probabilities were very high. So again, I kind of added into that period as well, thinking, okay, here's our kind of Mount Gox moment. Here's the big one. It's the kind of puking, the kitchen sinking of everything, of all negative news flow. And then since that date, firstly, it gave me a lot of comfort that ETH didn't make a new low in October, right? That was telling me something major. Then we started to see, even over the FTX period, ETH starts becoming deflationary. It's like, not even in a bull market, it's becoming deflationary. That was interesting. The Solana story was very interesting to me, because Solana had been, as the cheap narrative goes, it's just a VC token. But I started to dig in. I owned a small amount of Solana, but I started to dig in June to really look at the ecosystem and look at the depth of the ecosystem. And I thought, you know what, this feels like an ETH 2018 moment where it's down 97.5%. There's forced liquidations, and so that becomes interesting. So for me, it was an opportunistic year. It was hard because the narrative was so violent, and you felt so under attack by everybody. You know, not only did people from outside the crypto space turn on everybody on crypto, but everybody within crypto turned on each other as well. And it was a real moment of ugliness. And so it was emotionally hard to try and tune out the noise. But if you're truly believe in a longer term time horizon, then these are the opportunities you wait for. You know, and I would start to listen to people like Chris Boniski, who's great at this kind of stuff. You know, there's a few people, Arthur Hayes, there's a few people who really understood what this was in the cycle, and that it was an opportunity, not a threat. Then subsequent to that, we started to see the Gensler noise ramping up. And my hypothesis on Gensler for over a year had been, there's multiple hypotheses on him, but as a negotiator, he's going to start with hard no, hard no, hard no, you're all going to prison, you're all going to die. And the space is going to go, we're libertarians, we can do anything we want, we'll rebuild the Silk Road. And, you know, it's like somewhere there's going to be a compromise, and we don't know which side of the line. It's all fighting which side of the central line it is. Obviously, Gensler became politicized in the process as well, even more so than when he started, and had different ideas of what he wants to do, what that meant because of his relationship with FTX, whether they just wanted scalps, who the hell knows? But again, what was really interesting, as Gensler was firing up the narrative, and that was becoming the predominant narrative in the space, crypto prices were rising in line with liquidity. And again, that just gave me comfort that the macro cycle was actually more important, and the adoption cycle was continuing, and none of this mattered. I then started also focusing on, there's too many people on crypto Twitter are US based. And so everybody filters everything through their own narrative, which is they're going to ban everything. It's the US, it's the end of crypto. But when you look at it, the US is only a fraction of crypto. Yes, there's a lot of money there. Yes, a lot of companies building there. But in a world of capital that is liquid, that moves anywhere, it's like water. It'll find the easiest path. It flows. Even the EU, who can't seem to regulate anything very easily, got a decent set of regs across the line. Then we saw, obviously, Singapore had obviously put that in place. They had a bit of a bloody nose from the FTX saga, but they were still there. Then the news out of Hong Kong comes, then the news out of the UK comes, and I'm looking at this thinking, we've seen all of this before. Is the US is trying to become protectionist over the system of money because it is the world's reserve currency, but in a global capital market, capital will find a way. And my hypothesis has been, if the US screws this up, it'll just go to the UK. And I remember speaking to Brett Tedgepall and others from Coinbase saying, you know, the probability of you opening your main office in London is extremely high. It's like, yeah, it's easy to get staff to London. Yeah, the weather's a bit shit, but other than that, you know, it's an easy place to go. And, you know, my entire time in the finance industry, London was the epicenter of everything. You know, Goldman's main office was London. Nomura's main office was London. Societe Generale's main office was London. So we know how this plays out. And it doesn't stop capital. It just moves it around the board. And again, the US people were so US-centric about this that they were, again, getting confused over the global adoption, which is what we're all in this game for, versus, can I trade my bags? It doesn't matter over the bigger structure of things. So I've been very optimistic over this whole period because the narrative was peak pessimistic. And there was only one hypothesis to test. Is this technology going away or not? That was the only hypothesis you had to have. And if you didn't see evidence of it going away, or use cases dying, and the other thing that backed up my theories were, we saw, $60 billion of VC money go in? So there's an incredible amount of startups building new projects, building new areas, which will form the next foundation for the bull market. Now, we've never seen that much money in the space before. I mean, it's like 10x the size of the entire hedge fund market in crypto. Just went in like basically 2 years. So you have to start betting on the outcomes of that. What does it mean? What are the opportunities that are going to come that we don't realize? We know there's infrastructure stuff. I know you guys are involved in kind of the ZK side and all sorts of stuff there. We're also seeing some new layer ones. Do they help or not help? Who knows? But we're also seeing, I think, people working on how to get mass adoption. What is the consumerization? It's one of the things that also attracted me to the Solana ecosystem as well, which is really a small part. Mainly my main bets are in ETH, but because if I were to say Solana stands for one thing, it's a consumer application chain. Now, narrative is everything in this game, particularly in crypto. The meme wins. And if that's their meme, that's a nice meme to have because nobody else owns that. Somebody's going to own blockchain of gaming. Somebody's going to own blockchain of finance in the end, because I think that's how the space evolves. So yeah, with all of those macro factors, with peak macro pessimism as well, I started getting long the equity market for the same reason. It's like the pessimism was obscene. People attacking everybody who could be vaguely bullish made me think, okay, if the liquidity cycle is turned, we know what happens, which is over this period, the economy will weaken. So the probability of more liquidity, or more cowbell, as I put it, comes back into the market. And therefore, forward-looking asset prices, technology, crypto, will outperform. And that's been exactly how it's played out. Never feels that way because there's so much bloody attacking and misery online, but it's actually played out exactly right.
I think that maybe that's really hits home, especially when we get the Bitcoin ETF. I don't know if that's really going to change the game, but it has made people very, very happy at the very least. So maybe what you're saying is just like, man, the pessimism is drying up. And at some point, people are going to start to hear the signals for what they are. Maybe we're not there yet, but we're getting there.
I think the final part of pessimism that's washing through, most things in a business cycle terms, there tends to be things that lead and things that lag. So it looks like ETH led, at bottom first. The thing that lags is the further out the risk curve, which is NFTs. So NFTs are having a horrific time right now. You can blame it on Blur and other stuff, but really it's a factor of NFTs are recycling of capital within the space. So when people are making money, they want to buy premium NFTs, CryptoPunks or Fidenzas or whatever it may be. And when everybody's losing money, they don't do the same. It's the same with high-end real estate. It's the same with, Rolex watches. We saw that Rolex watch prices come down because of the same reason. Is once you go out, the kind of trophy assets and stuff, there's not enough money around. So that is still washing through the space. So that's I think the last part of what has to happen. And then as you say, the ETF is the chink of light on the other side. Now, the ETF in itself doesn't cause a stampede. If you launched the ETF between June and October, you would have had zero uptake. But the ETF, as price is rising, becomes very powerful. Because most people in this space are momentum investors, particularly the RAAs, the pension plans and others. Most people the institutions have done the work on this space, and all they need is price because they don't want to look stupid. Everyone's investment committees beating them over the head saying, see, you were stupid thinking about this, but everybody I speak to, it's still on their plan. I mean, don't forget, BlackRock were talking about this during the last cycle. Remember they had Bitcoin on their website and he was talking about, Fink was saying, we've had more hits on our website than we've ever had in history. They've been thinking about this through, as have most of the big players. So it feels that as the darkness is on NFTs, we see the light coming for new capital into the space, and then it flows through. And again, very typically in a cycle, you start with the benchmark asset, Bitcoin, that outperforms. Then as the capital comes into the space, because each other part of the space is less liquid, you put the same amount of money in. As it spreads down, it causes an outsized reaction in other parts of the space. So what the space does need is new capital, because we've been recycling capital for a while. It's the same with economies. There's no new investment anywhere going on in the global economy right now because of, except AI, because of the economic situation. Nobody's got money. But the moment people start making money again, it flows through, and we'll see again stuff like the ETH Bitcoin outperformance begin again. Now, interesting enough, I've been digging on work on that too. And I found that's entirely correlated to the business cycle. That I've got a certain set of indicators that kind of suggest when that happens. And it's based on liquidity. So it's the same thing. So that gets interesting to me as well.